Now, one of the industry that is doing very well in the JSE right now, it's gold. Gold is doing the most, or gold companies are doing the most in terms of recovery. I mean, how many gold fields they're trading at an all-time high, which is something that is so great, and it shows you that gold companies are really doing so great. But what happened? Why is gold companies or gold stocks benefiting this much? Well, it has to do with the price of gold. Price of gold is currently trading at an all-time high. I mean, as I'm doing this video, the price of gold is at 2,889. This is an all-time high. Gold prices have never reached this point, and this is one thing that is benefiting, of course, companies that are producing or mining gold. This is why companies like Harmony Gold, Gold Fields, Sibanye Stillwater, African Rainbow Minerals, and Northern Platinum Holdings are surging in terms of the share price, including Sibanye Stillwater. This is why these companies have been surging, is because the price of gold has been also surging. So it is the response of these gold companies to the gold price that it's at an all-time high. Now, how does this how does prices of gold impact these gold stocks or gold companies? Well, it's because they also produce gold, or they mine gold, right? I mean, if there's one thing that you must know, is that obviously what makes the companies do very well is the margins that they get to generate on the product services they are doing. And for gold companies, if gold rises and obviously the operations are still the same, it means that the profits that they will make on the gold that they are mining will be higher, because when they sell that gold, they will be selling it at a higher rate. These are some of the factors that will positively increase the profits of the companies or of the gold companies that we invest in, like Harmony Gold, Gold Fields, Sibanye, African Rainbow Minerals, and all the others, right? Gold companies. So this is the primary reason why these companies have been doing well, and I think it might be the right time to buy these companies. One thing that you must know, the relationship between the price of gold and the gold companies is the ratio is not always 1:1. You might find that the prices of gold goes up or rises by 5%, but gold stocks, the share price goes up by 20%. But I'll explain to you why that is usually the case, right? The first direct impact of the price of gold onto this company is, of course, revenues. The revenues that they generate when the price of gold is high, it's more. If the price of gold is 2,500, you and me can agree that if gold is to get to 3,000, the profits that they used to generate with that 2,500 price which gold used to trade at, it won't be the same revenues they will generate when the price of gold is at 3,000, right? So the higher it goes, the more revenues these companies will generate, and this will lead to higher profits, which make gold stocks more attractive to investors. This is number one. Number two, leverage effect. Now, like I said here, you'll find that when the prices of gold goes up by 5%, gold stocks, they will go up by 10%, 20%, 30% sometime. And this is because of the leverage effects onto the profits. Profits, you will know that they get to increase so much, especially if, like I said, the operations are remaining or the production still remains the same. You and I can agree that the profits will shoot or will be way more, because production is the same, but the price of gold is high, making these companies to generate more profits. This is the exact same thing that we saw on Thungela Resources. When the prices of coal were so high, Thungela was generating quite huge amounts of money because of that, or benefited because of that. Another example, perfect example that we see, you will know that the prices of lithium, it is a mineral that it's used to make EV or electric vehicle battery, and because that lithium it's so low, it means that companies that are supplying lithium to battery producers, they are now not making a lot of money, which result into the price of batteries also going to be cheap. And because of this, the EV car makers, they are getting to make more profits, because the amount of money they were paying on this battery, it's not the same. The prices of battery have gotten so low because of the lithium prices falling like this. So same with gold, because of the prices of gold has been rising, these companies will increase how they do business or how they are selling their gold, because of the fact that the gold price is up. They benefit from this. Their profits shoot to the roof. Because of this, they are able to generate tons and tons of money. And this is why you will see that even if sometimes gold price is up 5%, these companies will be up 10, 20, 15%, which is something that you must have at the back of your mind. Now, number 3, the cost of production. So as the prices of gold increasing, those companies with low cost when it comes to production, of course they will generate more revenues, right? Whereas those companies with a high production cost, they will benefit not that much because their productions are high. What they use to produce this gold, the machines they use are quite expensive. The operations are just so high. Diesels and all those other things they use to dig or excavate for that gold, they will not make as much profit as a company that use low cost operations or that has low cost operations to mine this gold. So this you need to have at the back of your mind to say that obviously companies that benefit on these prices, yes, all gold companies will benefit, but there will be those that benefit more than the others simply because of their low production cost when they are mining this gold, right? I mean, this is why you will see sometimes that when the prices of gold is too low, some mines end up closing down because their production or the amount of money they are using to get that gold is now more than the money they get when they sell that gold or when they process and sell that gold to various companies. This is why you will see some of the companies closing down because they cannot even cover, or the amount of money their generation cannot cover their operation costs, therefore making that company to run at a loss. This is the third thing. The fourth thing, investor sentiments and speculations. Now, when investors sees the price of gold surging, something that comes to mind is that they must invest into gold because the prices of gold is on the move, right? Like what we are seeing right now. One of the reasons or main reasons why a lot of gold companies, gold shares, gold stocks are surging is simply because a lot of investors are flocking into these stocks. They are buying like crazy because they know the more the price of gold increase is the more money they can be able to generate on these gold stocks, which is why you would also see these companies, these stocks, in terms of gains, they outpace so high the amount of gains or the amount of increase we are seeing on the actual price of gold itself. The actual price of gold can be up 5%, but the prices of these stocks or gold stocks is up 20%, 15%, which is this is another primary reason why you would see this sentiment around that. Investors will always think that what if next year around this same time gold is at 3,500? It means that these stocks or these gold mining stocks will therefore also reap the good rewards or good returns to those that are investing on them, which is why they would go and invest into the gold stocks. But of course, one of the things that, like I've always said, regardless of sometimes gold stocks doing so well, one of the things that can have an impact on today's gold stocks is political maybe influences, what might be happening in the country. Remember, investors, if there is a problem in South Africa, they won't invest into gold stocks or they won't invest into these stocks because they know regardless of the current conditions, they cannot invest into South Africa, maybe because of political tensions, maybe because of high inflation, high interest rates. Remember I said those two are also have an impact if whether investors should invest into a country or into stocks or not. But usually when interest rate is high, inflation is high, investors don't want to invest into stocks during those periods. But if they are low, they will come and invest. So there are also other external factors that over and above the gold prices, they can influence or have an influence into these companies. But as it stands, we are seeing these gold companies doing exceptionally well. Harmony Gold, Gold Fields, African Rainbow Minerals, Sibanye Stillwater, Northern Platinum. These companies are doing quite well because they are the companies that mine also gold, which is something that is great, something that is very exciting, and it will make those that are investing onto gold reaping the good reward. The good thing about inflation, interest rates in South Africa, these things are stable. Inflation, it's way below what the Reserve Bank was expecting, which is a good thing, right? It might be a good time for one to consider adding or go a bit aggressive onto these gold stocks, because there is opportunity as gold prices, or as the price of gold increase, these stocks in terms of the share prices will also increase. Remember, we invest into the stock market to make money, and this, I personally think, in my personal opinion, that it is the right time to go into gold, because all-time high, then the more it rises, the more these companies will generate tons and tons of money to those that are investing into these stocks. I'll see you in my next video. Do your own due diligence. These are just my opinions, not professional financial advice. If you seek professional and financial advice, you know what to do, and that is you need to consult the professionals. See you in my next video, and God bless you all.